course, like for everybody, it's a sigh of temporary relief. It's not an all clear. There's still a huge amount of uncertainty. There's huge amount of damage that's been done to the economic momentum that the U.S. economy had, and you know, we're seeing that's been a good catalyst for positive change in other parts of the world, but it's still a big shock to the system, and we're stepping back from the brink. Obviously, that's good, but I think the situation is far from fully clarified and back to where we were at the start of the year.
That's right. When you think of the trading momentum we've seen stateside, getting these major indices back to a level that doesn't necessarily reflect a big, deep downturn in the US economy, but what was achieved from the wrangling? It feels like we've gone through the ringer for not much of an outcome at this stage. Would you agree with that when it comes to what Trump has been trying to enact here?
No, I think it's a lot worse than that. I think you've really done a lot of damage to the U.S. economy. I mean, think about it. When the IMF released its forecast for the major economies back in January, and you know, by rule, they do that without incorporating policy plans that haven't yet been enacted. They had a 2.7% growth forecast for the U.S. economy this year, and now everybody's talking about, you know, high probability of recession, maybe a little above 50, maybe a little below. But it's extraordinary damage that's been done just by this talk of tariffs and the ones that have already been enacted. Against that has triggered in places like Europe and to a lesser extent the UK a surge in policy activity of historic size that is going to be good for Europe in the near term and in the longer run as well. When you think of what's been decided in Germany, for example, with respect to defense and infrastructure spending. So it's very different where we are now on both sides of the Atlantic, and of course as well for the rest of the world.
I would like more color on your point around how this could actually be a positive for Europe. Of course, we know Germany is expected to spend more, but ultimately the bloc is very export-oriented as well. So even if they look for alternatives to the United States, that will take time. Walk us through what is the outlook for the European economy then?
Yeah, I don't want to sound, you know, overly optimistic or rosy. As I said, it's a big shock to the system, and Europe is not going to be immune to that. That's for sure. Having said that, it is an extraordinarily strong incentive for Europe to focus on boosting its domestic demand, something which it had intended to do anyway. You know, there was a lot of investment ideas packed up in the Draghi report from last year. You remember that? Feels like a million years ago. Then you had the wake-up call on defense. All of a sudden, Europe realizes it needs to rearm, spend a lot more on defense. When you add up all these investment needs, you're somewhere around 900 billion euros per year. Against that, the entirety of the exports to the US, which are not going to go to zero, is in the vicinity of 600. You know, the surplus is below 250. And so if Europe just does like half or a third of the investment plans that they know they need to do and they've agreed to do, it will more than offset the fall in demand from the US. And by the way, I think, I don't read President Trump's minds, but I think his plan is not to tank the US economy. And so, by the way, it's also possible that this trade deficit with the US gets reduced not by US demand plummeting, but at least in part by Europe buying more from the US. And I think a number of European leaders have said, we're fully prepared to do that. Let's talk. Let's see what we can buy, what more we can buy from you. So this doesn't have to be resolved in a fully recessionary way.